Oh, there we go. Now you can see me, or you can hear me here. Hey there, everybody. Welcome. I'm Chris Franks with Texas West Capital. It is what is this? Friday, the 21st of January, 2022. Coming at you live from a chilly Bernie, Texas. And we're finally starting to see some of our winter stuff coming over here. We had ice and whatnot the other day, yesterday, I guess it was. So again, thoughts of last year around February when we had that awful snowstorm and ice storm down here all throughout Texas. Hoping that doesn't happen again. Hoping that if it does, ERCOT is better positioned to handle that now so we don't cut it quite so close to losing the grid. Anyway, hopefully you guys are doing well, man. Lots going on there. Bitcoin has still dropped. What else? Bitcoin's dropped. Stocks dropping. The dollar continues to push higher. Of course, in line with the interest rates on bonds there. The yield is what I'm trying to say, rising on that. So again, nothing really that you wouldn't expect. Right now, we've got a lot of people really fearful of Bitcoin, which, and same thing with stocks. They've had some pretty good drops here. There's a possibility that we could be seeing a bottom coming in. Usually it's when people are at their worst or at their most fearful, that price reverses. So kind of like that point, it gets you down there, to get you to sell, and then you go ahead and buy into it, right? Or you sell into it, and then it goes ahead and runs up without you, right? But then you're too scared to jump back in because, hey, you just had to sell at a loss, right? Or you thought you had to sell at a loss, or unfortunately maybe your position size was not correct, your leverage was not correct, and you were forced to close your positions there. So we'll take a look at some of that stuff today, guys, and talk about things that are going on with real estate right now. I told you I think that we're probably coming up to a top in that, and there's some indications that we may be. Which again, with the interest rates potentially hiking here, right now, guys, we've been talking about it. The Fed's got, it looks like they're pretty much on board for at least 3 rate hikes this year. They've talked about normalization of their books in the last meeting. By the way, we've got the FOMC next week as well now. And so, you've got all that going, and now you've got Goldman Sachs and who is it? Another big bank. Oh, I can't remember who it was at the moment here. Looking at likely 4 interest rate hikes this year. I'm going to tell you what right now, guys. If the U.S. is popping up with 4 interest rate hikes, that's just going to cause issues for everybody else across the board throughout the world there. So, and then there's this little scare thing about, Russia's looking at possibly invading, was it Ukraine over there? And, that's got everybody kind of anxious as far as things go on that as well. So, a lot going on right now, guys. And then, COVID's still doing its thing, right? It's craziness. But anyway, man, we'd love to have you here. HowToTradeToWin.com. You can join us in Tier 3 is the place to be. I've got I think what amounts to a pretty huge announcement I'm going to make next week is the plan. I've already announced it to our members. They know. But I'm going to let you guys know here, I think probably next week. Something that we're looking to do starting February 1st. And you'll be able to find us at a new website then as well at TexasWestCapital.com. So lots of great stuff coming up for there. Hope to see you. Hope to see y'all with us, man. Who else do we have here already this morning? We've got Claudia. What's up, Devolution? Hank's checking in. I guess still from Thailand, right, Hank? Oscar's here. Bill is here. Let's see here. Oscar says Doge is above 15 cents. TikTokers still holding strong or still holding stonks. Hey there, Crypto Mowgli. Good to see you, Brian, already. Am I buying here? Not necessarily yet. I'm, you're there in Discord with us, and we'll talk about that here in a bit. But we haven't actually pushed through any level right now that would even be like maybe we're headed up yet. That clear level, really what I'm looking for, honestly, guys, is definitely a breakout above Wave X here at 453.22, and that would also take us out of this descending channel resistance. It also takes us above the 4-hour pivot here. That's that real first clue that okay, wave 2 may be complete. That's that level you need. But what you really need to get through then to add confidence to the counter and kind of really start looking up there for wave 3 is this higher wave X here at 52,100. So your first clue that wave 2 maybe is complete is this one here at 44,453. And the one that you sit and you go, okay, well, if we go through here, then most likely we're going to continue heading up, is up here at 52,100. That doesn't mean you have to wait that long. You can zoom into smaller time frames. You look for 5 waves up on that smaller time frame. Preferably, you want something that's going to break out impulsively above the daily S1 pivot right here at 39,323 and 86 cents. About that there on Coinbase. If you can get an impulsive breakout above that, then that's going to hint that maybe wave 2 may be complete. But again, you still want to see that follow through up here through that 4-hour pivot and through wave X, descending channel resistance, all that, before you start getting kind of giddy about it. Don't get giddy when you trade, guys. That's emotion. Don't get giddy, all right? Tell you Ryder, what's up, man? Good to see you here. Keep checking in. Data's here as well. Let's see here. Data says people like calling it luck when you've acted more sensibly than they have. Most of the time, it's just when preparation meets opportunity. There you go, right? That's exactly it. Hey there, Sylvia. Sylvia, oh my gosh, man, my eyes are so bad. Bianca, good to see you guys. Aramis checking in here. He says, happy Friday, or is it? The markets are down. Yeah, we'll kind of continue looking at all them as well. No, you know what? I'm going to hold off before I say that. I'm going to wait till we get down a little bit further into here. Let's see here. Let me see here. TV Canal, I think, is trying to be funny. Hopefully not trying to be obnoxious. So that would be really sad. Again, we don't do that here, right? Andrew Bennett, what's up, man? Kerouac is here. He says, lovely gateway to the weekend. USD CAD looking to push higher. Yeah, oil's pulling back here a bit. We'll look at that. I think it may be a wave 4, like we've got wave B of 4 kind of completed or nearly so, and we'll still have wave C to come on down. So that'll give the some weakness to the loonie, and the dollar itself is still on that upward trend. So if the dollar can finish its pullback and push higher, then you've got the dollar gaining strength off off that DXY rising. So basically the euro dropping. And then, of course, the loonie there, finding some resistance, losing some value there because the price of oil dropping. So yeah. Trey and Crypto, what's up, man? Good to see you here. Crypto Critical checking in. Let's see here. Crypto Critical saying, Henny Penny said the skies are going to fall. I must go and tell the king. So she went long, and she went long again. Oscar says that Russia won't invade, and even if they do, it's a wrap in under 48 hours. Half Ukraine or more is pro-Russia, old CCCP. Yeah, that's a whole interesting thing going on over there. Again, guys, I'm old enough to remember it. My dad was, both my parents were in the Navy. So I grew up with that whole, looking at the world and the way things are. We lived outside the country. We always paid attention to what was going on in the news and everything because, with my parents being in the Navy, always really, caught up in whatever's going on. My dad was a linguist. So, but a linguist and a, what do you call it? I can't think what the word's called right now. He dealt with codes. But anyway, so, he was really involved when we had a lot of things going down. We had the first invasion of Iraq and then the second invasion of Iraq and all that kind of stuff. So, growing up, it was the U.S. and it was Russia, right? And as a kid growing up in the environment, it was really top of mind. World War III, this whole idea for our household. And so now we fast forward today. You had the fall of I say Russia. I think I said Russia, but I meant the Soviet Union. You had the fall of the Soviet Union there. With Gorbachev and all that. And then that became the U.S. was the single lone power, right? Superpower. And then fast forward to today, and we've got China, which has, instituted over the last 20, 30 years some of these freer economy kind of ideas, which has led it to really propel and really kind of just, if you guys look at where China was 30 years ago and where it is today, you'd be amazed if you haven't looked at it. So this big, huge growth in China, which has made it a world player, a world power now, right? At least economically. And then you have energy kicking back up, which has helped Russia again raise itself or start to raise itself into that, up into those upper echelons of power now as well. So, now we got kind of this thing going on. But, at the end of the day, the world is still kind of beholden to the dollar, whether you like it or not. You can sit here, you can argue all you want, but the reality is that's kind of where we're at. And so whatever happens with the dollar is going to affect everybody else throughout the world. Now, we can look at the ECB right now, and pay attention to what they're going to say. I told you that they were talking about not raising interest rates until next year, right? Until 2023. And I've told you here that I think they're probably going to raise it at least toward the end of the year, at least once toward the end of the year. Now, that won't be enough to combat what the Fed is set to do and potentially going to do, with 3 and 4 hikes, normalizing the books, all that kind of stuff. But, it'll give the ECB something there. I think what's really interesting right now is if we look at those 10-year T-notes, and we look at option activity on that, there's if we look at the March ones, right? I think we could potentially see some fireworks coming off that because they're so what's the word? The puts there, the open interest on their puts are just so stinking high. So really just, whatever word you want to use, outsized or whatever, it's so much larger, that it could cause a lot of issues coming up into that, into those March futures there. So, again, March is and why is that, why is this all happening? Well, because March is when, we've got the potential end to the QE, the tapering of QE, and also potentially the first rate hike coming out of there. So I'm telling you guys, watch those March futures there about mid-February. So yeah, that could be really interesting. We'll talk about it more as it comes up here over the next few weeks, if you don't really understand what I'm talking about. And we'll talk about it a little bit more and kind of really kind of show you what's maybe going on there. But anyway, just kind of keep paying attention to it at the moment. Even if you don't look at the charts itself, pay attention to the news about it. That might give you a little bit of something there. Hey there, Alan. Good to see you. Chris Baker's here. Hank says not leaving Thailand for a while. Let me see here. TV Canal says he's got his short still on, looking for 33, and then he thinks the uptrend's going to start. Let me see here. Let me kind of catch up with you guys here. Andrew Bennett says he's buying some dips here. He says a lot of the stocks, RSI weekly is way low. Yeah, we've got a lot of really oversold territory on your stocks and on your indexes. That doesn't mean they can't go lower. But you should be paying attention to them. Yeah. I mean, we've got accounts that have got it going lower right now, but still going to be very wary of what's going on and seeing maybe if we have to adjust those accounts a bit. But man, I mean, Tesla's still taking it to the chin. Kathy Woods and her ARC, man, that thing just continues to fall off there, up into this morning at least. So nothing surprising there. That was a good short from when I mentioned that. What was I guess about a week and a half ago or so? Yeah. Blaze, what's up, man? 10 minutes to class there? Well, glad to have you check it in while you can. What would need to release my inner bear? Again, remember, guys, I'm not bullish nor bearish. I'm just long money, man. I think, really, I know what you're saying. When are you going to think that it's definitely going down or, most likely going down or whatever? And, we'll go with the chart with that. But at the end of the day, I'm never bearish. I'm never bullish. I'm just trying to make money. I think, what I've found in the last, 25, 26 years of doing this is that those who spend a lot of time talking about bullish and bearish have a lot more emotional connection to the market, and it makes it a lot tougher to trade correctly and logically and non-impulsively. So I don't really like to use those terms at all, even when I'm talking to you guys. There's just too much emotional connection with those words. I'm just looking at trends, man. The trend's up, the trend's down. I'm looking to make money within that trend. We can talk about where we think targets are going and whatnot, but at the end of the day, my goal as a trader, guys, I'm going to tell you what right now. Pay attention. You want to know the secret of trading? You want to know what the secret of trading is? It is not trying to sell here and then trying to buy here. It's selling in here, buying in here, selling in here, buying in here, selling in here, buying here. It's what it is just the consistent locking in of profits, of identifying the trend, getting into that trend, and then getting out while liquidity's still there and locking in profit. And this is the big difference between successful traders, professional traders over time, and amateur traders, because amateur traders are going to constantly they're going to worry about tops and bottoms. They're always talking about tops and bottoms, these exact levels. As if they ever actually get them. They usually don't. But what you can do pretty easily, most of you are going to be really good at identifying when price moves in a trend, right? And getting in, like a drop here. Usually pretty good at understanding that, and you go short there. The problem is you hold on to it and you don't get out. You don't lock in your profits. And then you lose all that money trying to work through, either the rebound or corrective areas. Guys, this is it. This is what it is. Just look back at all the episodes that we do here and look how many times people are talking about, tops and bottoms, absolute levels. And they're so worried about those absolute levels that they don't ever lock in profits, or rarely lock in profits, or lose a lot of money that they could have had otherwise had they just locked in profits, right? So I want you guys to be careful when you're out there doing that. Trading successfully over time is a lot different than what you think it is when you first come in as a trader. And we all tend to think the same thing when we first come in, because we're all emotional, we're all human beings, and we all look for those same kind of ideas. So the real determinant when you come in as a new trader is, can you get yourself away from thinking like that? And when you do it, how quickly can you do it? Those are going to be the two biggest contributors to your success as a trader. As long as you continue to think the same way you did when you came in, news drives price, you got to buy the lowest and sell the absolute highest, and in all these things, you're going to constantly be behind the eight ball. You're going to have to constantly work just to try and make a little money, much less not lose it all. Let me see here. Crypto Critical says, I grew up in the Cold War times as well, then served 7 years as well. Yeah, exactly. So, those of us that grew up in that time, especially if you grew up within a military family during, the Cold War, you were definitely well aware of the possibilities of World War III, and you always knew what was going on with Russia, and it was kind of, or I keep saying Russia, Soviet Union. It's been so long since I said the Soviet Union. But and so it's been such a crazy thing, over the last 30 years not to really have that kind of issue. But of course, like I said, now you've got China moved way up there. But at the end of the day, even though it's still, finds itself at the mercy of the dollar and other currencies as well, because it's borrowed so much to fund that growth that it's had. So again, the whole idea is that rising interest rates in the U.S. are bad for the rest of the world, because so much of the world holds so much U.S. debt. And by law, that U.S. debt has to be paid in U.S. dollars. And so as the interest rates rise, the dollar rises, and so that debt becomes more and more expensive to pay off. Now, if you're a larger, more developed country, okay, well, it's not as bad. I mean, it's still going to give you a pain. But especially if you're a small developing country, oh man, that could be just completely detrimental to growth or whatever. You'd likely end up defaulting depending on how bad that raise in interest rates is. And I'll tell you what, guys, with inflation, we got it up there, what, at 40-year high there back there in December. I mean, there's no way the Fed doesn't raise rates. The question is, how many times do they raise it and how quickly do they do that? I think, if you want to fight that that inflationary kind of raise there, the rise, what they refer to as inflation there, I think you've got to raise it quickly and quite a bit. I think, the Fed's probably going to go out with quarter basis point rises, right? And I think you got to do more than that if you really want to stave off what's going on there. So you have your supply bottlenecks and your distribution bottlenecks, which we're still seeing today. And then on top of that, you had the government saying, oh, you don't have to pay your rent or your mortgage. Oh, you don't have to pay your student loans. So these biggest bills that people don't have to pay, all of a sudden they don't have to pay. And on top of that, the government's then giving you more money in terms of stimulus payments and unemployment, extra unemployment benefits and stuff like that. So you find the people in the U.S. here getting a moratorium on their most expensive bills that they have every month, basically is what's happened over the last kind of few years here. And then they're getting extra money coming in. So the only way you kind of combat that at this point now is that you raise those interest rates, which makes it more expensive to do those things you were doing to begin with. And of course, you lift those moratoriums on that stuff. Student loans, guys, again, we've been tracking it every time. It keeps getting pushed back, and everybody was supposed to have to start paying back their student loans here in January, end of the month. And that's been pushed back again to the beginning of May now. So how long are they going to keep doing this, Democrats, the progressives and the moderates and the Democrats there can't get together and agree on anything. And the Republicans are just kind of sit back going, okay, yeah, well, you guys figure it out. But as long as the Democrats can't get it together within themselves, I mean, by default, whether you like it or not, if you're into politics, whatever, Republicans kind of win. And the economy overall, it's just this little game that everybody plays. Republicans and Democrats really don't care about the economy other than what it means to their party's support, guys. And the sooner you recognize that, the better off you're going to be. But that's kind of where we sit with all that, the economy, what's going on with there is basically a toy between the, how do I say a toy, this kind of, what word do I want to use here? They use it to get you to do things that, to vote for them and to support them. I can't think what the word is at the moment. It's the problem with getting on here and talking, guys. Sometimes words, fail you. But anyway, all that kind of plays into it. But I think the bigger picture is all of this is just a result of what people are feeling in general. So we always go back to that idea of socionomic theory of finance, right? Where the idea is that the market and the things that are happening are a result of what of what people are feeling, of how they're feeling at that time. It's not the other way around. It's not that the market does good and then people feel good. It's people were feeling good, so they bought into the market and the market went up. If the market's coming down, it's because people are feeling worried. They're feeling concerned. They're taking money out. They're shorting. They're not putting money in. And so then your supply, outpaces your demand in those things. And then that's why it goes down there. It's not the other way around. Let me kind of catch up with you guys here. Telltale, what's up, man? Oh, you're still thinking it's dropping because of the Gap TV canal? Okay, well, we've had that discussion before, so I won't go over that again. Let me see here. Diego, what's up, man? Good to see you. Alan says Netflix is taking it. Hank says Arc Head and Shoulders target achieved, according to Peter Brand. Yeah, and we talked about it on Tuesday that we were probably kind of nearing an area where we'd at least get a bounce, based off of what I'd done a few weeks earlier looking at it. So, Yeah, at the bottom of that channel there. So we'll see if we can get that. And by the way, just because it hits the pattern target doesn't mean it has to stop there. You guys know that, of course. I know Hank knows that. But, it gives you that target that you look at as it drops there. Let me see here. If there's one thing more enjoyable than taking profits, it's spending profits. I agree. Alan says Netflix looks like a bad crypto coin today. You guys are great, man. Blaze, have a great day. Let me see here. Andrew Bennett's talking about Ethereum daily RSI oversold. Last time was the March 20 dip. Also appears to be at a major support around 2,700, maybe even a bull div on the daily. Yeah, again, you're starting to see those kind of divergences showing up on all these cryptos. And we're going to talk about here as well. We're going to zoom out on the Bitcoin chart here, and we're going to talk about where we are versus where we were in March, and why what's going on here makes a lot of sense. So yeah, let me see here. I'll just kind of catch up to you guys here. Let's see. Oh, just gonna catch up with you guys here. Sorry, my freaking my eyes are so bad today. Trying to catch in. I don't say to the moon. I won't be saying that. Let me see here. Alan, you said your dad gave you socionomic theory for Christmas. Been digging into it and enjoying it. Thanks for the recommendation. Hey, no, I'm glad you got that. I actually sent a copy to my dad as well as well as the book, The Fourth Turning. I've talked to you guys about. I sent both those to my dad probably a year ago or so with that. So yeah, it's good stuff. I don't know where my glasses are at the moment, Hank. That was the problem. I was looking for them here around this huge desk I have here, and I couldn't find them. So I'm gonna have to. I don't wear them nearly enough, and that's on me. It's a lifetime of never needing them and then needing them all of a sudden, and it's just a bad habit not to wear them. Let me see here. So anyway, so here's where we are at the moment. This is kind of what I'm looking at as far as this count here. Nothing's changed. Last time I talked to you guys, I said if we lost support here, we'd be looking at this as WXYXZ kind of thing going on. Grand scheme of things, guys, I know many of y'all want to be, it's going down, and it may. We've talked about this, it may. But at the end of the day, we haven't quite even hit the 78.6 retracement yet. And so, it's a solid wave too, right? I mean, realistically, if you say, oh, no, well, then who's being emotional here? The reality is that if we zoom out here in terms of this, right here, again, it's just hitting that 78.6, which is right here at all this kind of support right here, right? Support, resistance over here. As far as the daily goes, depending on what happens today, now, we've got some hours until the end of the day, but if we decided to, if somebody decided to go ahead and buy on in there and price kind of rallied back up, it's possible down here that we could get a bullish divergence. Doesn't have to happen, but I'm just saying if we were to get some kind of buying in there, we could see this potentially even close up above the S1 pivot today, which is right there around, 39,340 or so, right around there. Which it's just about $1,000 up from where we are right now. But again, it would pull up the RSI here and potentially give you bullish divergence on that. I'm not saying it's going to happen. I'm just saying if you start getting a rally here before the end of the day, I'd watch for that because that would be significant to get that bullish divergence here on the daily, right? Stoke RSI almost down there to that low, right? Into oversold. Now, here's the thing. I talked about this before. I haven't talked about this in a while, but in Elliott Wave, we talk about the theory of alternation, which basically says that if wave 2 is sharp and strong, then wave 4 is going to be more sideways. It's going to take longer, right? Or opposite. If wave 2 takes a while, it kind of goes sideways, a little more complex, then wave 4 should be sharp, right? So if we look at this as 1, 2 here and 3, 4, right? Well, what we end up having here is this very sharp ABC, right? For wave 2. Wave 4 then going sideways, basically all of last year, because we're looking back over here, where we've just kind of still all over in this area, right? That low kind of area here. So we've really just kind of gone sideways here for the past year. And so that makes a lot of sense in terms of what happened here, right? Now, overall, this wave 2 here took, how long did it take here? Let's see. I believe that was June of 19, right? Yeah, June of 2019, and then, of course, March of 20 here. So you're looking at 259 days or so. 37 bars on the weekly. If we look at this as wave 4 here, if we go, we're still looking at the count here, which is potentially a 3, and then A, B, C as a flat here. Now, if we say, okay, well, wave 4 is done here, well, okay, so we got, this is a little bit longer, this a little bit shorter. If this is wave 4 still doing a flat, as you guys are looking at potentially, from up here, right, you're looking at any diagonal coming down, right, so you're flat working out here. Then in this case, we're already a bit beyond this, so again, it would make sense to continue out for a bit longer. In terms of that wave 2. So, again, guys, and more importantly, the fact that this is a pretty clear, ABC here versus this right here, which is a lot more overlap going on here. So, theory of alternation stepping up there says, if this does turn out to be still wave 4 in progress here, I mean, there's no real big, real big crying shame or whatever that I would worry too much about it. Now, if it is a flat correction, again, what I'd be looking for is A, B, and as I said, C probably reaching this S1 pivot here. So if this is to be a flat correction, I would expect us probably to touch this S1 pivot here on the weekly. So that gets us around 26.5, somewhere right around there. I know, fearful, right? But, if it does, that'll be when everybody's scared, everybody's, convinced, because it drops down below that swing low right here at 28.8. And everybody then goes short, thinking it's got, oh my God, that was the top, it's coming down here. And then, of course, it reverses and heads back up without them. So if it is to do that, nothing's changed on that thought. That's still where I think it would go if we do that. Do I think this is the top right here? We kind of went over this last time. And you can potentially get 5 waves up out through here, maybe 1, 2, 3, 4, and then a 5 here. But again, that still remains to me the least likely scenario at the moment. Now, as price continues to go lower, of course, that scenario gains likelihood. But, there's a lot still to do within all this. You can see that right here on the weekly RSI, we've got hidden bullish divergence printing. We're down here well oversold in our Stoke RSI. Let me see here. What else can we look at? The monthly, I think, is the same idea here. Yeah, we've got the same hidden bullish divergence there coming out right here. And then we're broke down into oversold here. But, again, this is the monthly, so, we've still got another, 10 days left to see how it turns out. A lot of wicks here, so there's a lot of demand on the monthly in this area right here. So this is that 30, almost 30,000 to about $35,000 area here. So yeah, I would definitely watch that. But if we get that breakdown there, then that S1 pivot looks like a great target. And we'll go from there and we'll see what happens. You can see that there is this big kind of... it looks like bearish divergence here. My big issue with that is we have this all the way down and then back up. And so what we actually have here, I believe, is a lower highs, and then higher highs and higher highs. And then we have potentially some actual bearish divergence up here at the top here, leading to then this potential hidden bullish divergence. So, again, same kind of idea here on the weekly as well. So looking at more likely at least on the monthly, there being a bit of bearish divergence up there, so you're getting this pullback. And of course, you can see that it's different here on the weekly. You're basically getting your higher highs there. But again, you see this big move in the middle here? That's the same thing I was showing you in the monthly. This signals that this is probably, even on the monthly, not the correct one. You have to go from this point to this point, and then this point to this point. So again, lower highs, so no divergence there, and then higher highs, no divergence there. And then, of course, you get that local bit right there, kind of leading to the sideways and the down. So that, that's how I kind of look at all that. I think a lot of people that watch the shows here still are trying to anticipate the market rather than speculating. And like I said, that's the way that you lose your money. You don't want to do that. There is a significant difference. People come up and say, oh, trading is just gambling. Well, it's not unless you're trying to anticipate the market. But if you're speculating where you're looking for confirmations before entering, then that's not gambling, right? So anyway, here we are kind of looking at this. Do we go lower? We bounced down here. We bounced off that descending channel support. Again, that 78.6 sits here at the bottom of this demand structure here. Oh, I can't even get that to show up on the chart. Here's lower time frame. There we go. Right there around 37,402.80. And then, of course, if we zoom to the 1 hour here, we have this S2 pivot sitting right here just below that as well. What I am interested in is the fact that we've got, kind of get all this stuff out of the way here, that on this drop here, we've got a lot of volume in this area as we're getting overlap. So most often when you get that signals either a reversal or at the very least a temporary bottom of some sort. Because what you're seeing is when you have this expansive volume, a lot of volume, volume was way down here, right? And then we've got a lot of volume here. And so what that says is that, but your price action is just overlapping, right? It's going down a little bit, but it's overlapping a lot, right? And so what that tells you then is, either supply is fatigued and or demand is showing up in much greater swaths. And so again, that's what gives you a possible reversal or at least a temporary bottom to give you some sort of bounce along the way there. So I'm definitely interested in that. I told Discord that I am watching this right here. I'm interested in what's going on with this 6 hour candle here. Because look at the volume compared to this volume right here. You see you've got this nice big candle spread and this large big thing of volume. And we got about 12 and a half minutes left in this 6 hour candle. Volume is almost the same, but significantly smaller candle spread compared to here. So because the volume's almost the same, what that means is you have that almost the same amount of trading going on, of buying and selling aggregate going on, but your result for supply is much less here. And again, what that means is in the total of the volume that's going on here, either supply is lessening and or demand is increasing. Okay? So the idea is that demand's showing up a lot more here than it did here because you're still getting similar levels of volume, but that candle spread is much, much smaller here than it is here. And that's important because those things often denote, again, potential reversal or at least some sort of temporary bottom as it does. So you always want to watch this. Something I've talked to you guys about time and time again. When you do get a downtrend like that, you always want to start watching those big volume spikes and those candle spreads and seeing how they relate to each other to kind of give you an idea of maybe, is there going to be a reversal or at least some sort of short-term reprieve on that. So, yeah. Let me see here. We kind of catch up here. Okay, you guys are just having your own discussion there. Okay. Let me see here. So that's kind of what we're looking at, right? As far as where this goes. So, I'm not in a hurry to jump in just yet. I'm still waiting again for those major levels to kind of show some follow through them. But I am going to be interested if we get an impulsive breakout above this daily pivot, whether it's from this low or drops a bit lower and then pops up. That's going to hint that impulsive breakout above that daily S1 pivot is going to hint that that maybe wave 2 is complete. Now, with that, really, if it happens prior to the end of today so that the daily candle closes back above that daily S1 pivot, that's going to add some support to that idea that maybe that wave 2 is done. But that's what I'm going to be watching initially, and then I'm going to see how does that develop in there, because I'm really not interested unless some kind of big bullish divergence or something shows up. I'm really not interested until we're kind of breaking out above that lower wave X right here at 44,453.22 and that descending channel resistance. The breakout above that descending channel resistance now gives us a target of about $17,020, $17,000 above the point of breakout based on the height of that channel. That's just a pattern target there. If this is wave 2 and it's done or very nearly so here, you're looking at a minimum expected wave 3 target, wave 3 of 5 of about 102 or 103,000. Just our normal where we look for price to go, right? 1618 for a wave 3. So, but until we're getting through those areas, the possibility is that we could continue lower. But again, you don't want to be that person that's anticipating and feeling pretty cocky whether price goes up or down, because that's likely to keep you emotional. And you might argue, oh no, I'm not emotional, but those kind of responses belie what's really going on. If you're not really emotional, then you don't really get cocky, right? About whether price is going up or down in line with whatever your thoughts are. And I only say that because, again, if you're not monitoring your emotion with what's going on, then you're setting yourself up to put yourself in a bad situation. And you don't want to do that, especially if you're right about in the direction it's gone and you've got in and you've got a lot of profit locked in. The last thing you want to do is lose a lot of profit because you were so full of yourself, right? So that's the one thing as traders that, I talk about this all the time, but I don't see a lot of people really kind of grabbing onto. And so then they find themselves, where they're doing well, but they just end up self-destructing. They just create their own issues because they don't notice these things, take note of these things, and, take care of it. So definitely watch that stuff, guys. Let me see here. Andrew, what's up? Andrew P. says, I remember you teaching us this volume lesson a year or so ago. It makes total sense. Thanks. Hey, man, I appreciate it. Glad you remember it. It is so much. Everything else aside, guys, just that simple bit about volume there really gives you a lot of information, regardless of how you look at the charts, about what may be happening in that area. Again, it doesn't guarantee that what you think may happen, but it gives you at least support for your idea that maybe this might be doing something here that we would normally expect with that sort of thing happening, right? And that's the cool, because that's what you want to do, because as a trader, what happens is never guaranteed, right? There are no guarantees in trading. Other than if you're emotional, you're going to end up losing all your money. I'm going to go on a limb and say that. But other than that, as far as what charts look like and whatnot, a chart can look amazing. It can look like really strong what you think it is, whether that's up or down or sideways or whatever, and then do something completely different. And this happens all the time, guys. So that there then gives you the importance of your invalidation and validation levels and whatnot. Let me kind of jump on a bit here, guys. Let's see here. DXY, the dollar here, as I said, continues to rally, right? This is not the right dollar chart. Let me see if I find do I have the right one over here somewhere? Big picture is still, what we see there going with everything. We got this bounce off that S2 pivot, rallying back up toward that daily pivot. But where's my dollar chart? I guess I don't have my, let me go and pull it up here. This is an old chart from the 10th. Let's go up here with it. 17th, that's the one I want. There we go. All right. So what I'm looking at here potentially is, Wave 4 potentially being done down here. 1, 2, 3. Wave 4 may be printing a flat correction here. The big reasoning from that, this is kind of a whole bunch of overlap and whatnot. It's not a lot of fun to count, but this right here is 1, 2, 3 waves, right? So likely that this is, maybe an A, B, C, A, B, C, and then coming on down here for 4, which may be A, B, C is 1, and then 2 up here. Yeah, so A, B, C is 1, 2, A, B, C is 3, 4. And then maybe we get an ABC 5, which kind of targets, usually with the flat, you're looking for it to drop right below that wave A, swing low there. So that's what we're kind of looking at right here. We'll see if we get that. But as you can see here on the 1 hour, Stochk RSI still has a lot of room there. RSI is just kind of neutral right there at about 47 or so. So we'll see. So the big thing is, does it break out above the top of this range right here, this 95,861, or does it drop right here below 95,419? Like I said, if it drops below this little one here, I'm expecting to see a reversal and head back up for 5, which will get you up here around 96.081. But again, if you break it out through here, then it's possible. It's maybe possible here. It's maybe possible that wave 5 is doing like an ending diagonal here. So ABC 1, 2, ABC 3, 4, ABC 5. When we look at that. So right now, my big thing is, do we break out above the swing high here? Or do we break down below the swing low here? If we break down below the swing low, looks like wave 4 is printing a flat. So 5 to go. If we break out through there, it looks like wave 4 may be complete here. And we may possibly have a ending diagonal forming here on wave 5. In either case, overall, dollar expected to kind of continue higher there. Now, so that brings us to what's going on with the euro here, right? And so the euro, again, expected to head lower overall. Right now, the count, I'm looking at maybe we've got a 3 and then a 4. And that 4 may be complete. We almost rallied up to the 50% retracement there. And then that would give us a wave 5 down here at 1.12672 expected. And then what we're looking for is a breakdown below this ascending channel support, kind of like what we had here. And especially if that happens impulsively, so expanding volume, larger candle spreads, that would be your first clue that wave 4 may be complete. We need a breakdown below wave B here at 1.13223 to add confidence to that count. If we can get a breakdown through that, then that really kind of suggests that that most likely wave 4 is done and wave 5 is in progress. Now, I say that, but here's the thing. The Aussie dollar, the Aussie against the U.S. dollar, and the cable against the U.S. dollar, both have what appear to be wave 2 completions and wave 3 starting down. So it's possible that this could actually be 1, 2, 3, 4, 5 here. And so wave 1 is done. And you're just getting this short wave 2, toward what would essentially be the 38.2 level here. Right into this wave 4 area. And, if that's the case, then your downside is going to be much more significant. If this is a 1-2 here, then your downside right here, is looking at a wave 3 down here at around 1.10673. Wave 3 of 5. Again, this being the larger wave 4 up here. Because remember, that larger wave 3 is down over here. So that's down over here at around that 1.118.5 level. So, oh my gosh, yeah, look at this. I just looked at this. So based on, 1, 2, 3, 4, 5, we had 5 as a target down here at 1.1, right? 1.10. And I just did this draw right here with if this is 1 and this is 2. Look at that. It gives us a wave 5 of 5 right at that same area, almost exactly. So, man, oh man, I'm going into this right now myself, looking to short this thing down to at least this level here. But depending on how that looks right there, again, this may end up being a 1-2 heading down lower. I don't think there's really too many people out there that think that um, that the euro is done bottoming yet. I've been looking at a lot of analysts, and I don't see anybody else saying that. A lot of them seem to be along that same line that I've been for a while, which is we've still got that further down. Let me see here. Telluride says, I'm oversimplifying, but I feel like it's just legacy scaring people, not any particular news item like the Russia ban, Tether, FUD, etc. Oh, okay, you're talking about crypto. Yeah, Russia wants to ban all crypto. It is what it is, blah, blah, blah. Same old thing, that we've seen time and time again. It just was it's mostly always been, on China, and then, was somewhat on India. Now it's Russia. I don't really watch a lot of that just for that reason. It's all, superfluous, right? It's all just extra stuff that it really, I don't think makes a whole lot of difference in the grand scheme of things. Because again, I believe what's going on, with the markets is just based in that investor or that, social mood, that investor sentiment, kind of real deep sentiment thing. But, again, we talked about real estate potentially topping out, right? And so there was this article on CNBC that just came out that says real estate is the most zombified sector, and rate hikes will be a big risk, says the consultancy that they're referring to here. And of course, zombie companies, as we talked about them before, are firms that have been on the market for more than 10 years and earn enough to operate but not to pay the interest on their debt. And this is important because, remember, it's this idea that the government has been, or the Fed has been propping them up. And so everybody and their grandmother's been getting into them because, the Fed's going to keep propping them up, right? But then now that the Fed's pulling that support, these companies can't keep their debt serviced anyway, and so they go down, and so then the people that are going to lose money, blah, blah, blah. And this is that big thing I've been talking about for the last, year or two now, as far as one of the big things we need to watch. Because, as the economy continues going there, because that is going to really kind of cause some havoc. Because it's so big across all those different companies, but especially like it notes here in real estate, right? Which is interesting because if you think about it, you think of real estate over in China, you got Evergrande, you got everything else that's going on there, right? So it's not just here in the U.S. As far as what's going on with real estate. And, and a lot of people, real estate happens to be their largest holding, right? Their largest purchase, their largest bills. So it could be quite significant, right? So the consulting firm was Kearney, which is Kearney. And they believe there's a big risk of real estate companies filing for insolvency when interest rates rise. I mean, you got to face it, guys. Real estate is all about interest rates, right? And so we look at that, and then we can look at, let me see here, what else we got? U.S. home builder sentiment dips. New York state factory activity plummets as well. This was earlier this week. Let's see here. And so basically the headline here, the first line up in there says, confidence among U.S. single-family home builders slipped in January after 4 straight monthly increases. And builders called for a new softwood lumber agreement with Canada to ease shortages and lower prices, a survey showed on Tuesday. Well, I'll tell you what, if interest rates are going to rise, they ain't going to have to worry about that. The shortages ain't going to be too big an issue. But, potential bankruptcies are going to be for all these real estate related companies because they've been living so high on the hog over the last year or two, with everything with the easy money that went in and then the supply bottlenecks, propping up prices. Man, interest rates goes up, prices are going to come down. People will be less doing it. And so when you're looking in terms of, are you, looking to get into the market, into buying the market right now, you're probably buying the top. Now, guys, if you plan on buying a house and it's something you're going to stick in for 20 years or something, who cares, right? I mean, you don't want to buy at the top, but it's not like you plan on going anywhere anytime soon. If you're looking to buy right now in the hopes that you're going to flip it in the next year for, 15 or 20% rise in value, I wouldn't do that. I would be very, very cautious with this kind of stuff going on right now, right? And then, so again, we talked about interest rates, and so the third, I guess, the third horseman of real estate is mortgage rates, right? So mortgage rates are rising again here in the U.S. 30-year fixed mortgage rates are now at the highest level since April of 2020. So that's right after that big drop in March, right? And so now we're at the highest level since then. They're closing in on a full percentage point gain from a year ago. So Matthew Graham over there, the CEO of Mortgage News Daily, says that some lenders will be at 3.625%, but many are already up at 3.75%. Again, higher mortgage rates means less demand because people are going to be less inclined to buy and pay those higher interest rates, right? And so what does that mean? That means less demand for properties, which means even though January has seen this large move up in competition for buying houses, right? This demand, it's likely to kind of taper off now. Higher interest rates mean less people want to go out there and buy because it becomes more expensive. And so when you're buying real estate, this is always the thing. As you get toward the top of the market, interest rates are at their lowest rates, around those areas, but the prices are at their highest. And then interest rates will rise and prices will drop. So either you buy high with a low interest rate or you buy low with a higher interest rate. And that's kind of where you're at there. There is no real sweet spot with it. You just have to decide how long do you plan on being in that property. Are you going to, pretty sure you're going to be able to service that debt, that mortgage, which means, okay, what's going on with your employer? What's going on with the economy? Stuff like that. Because I'll tell you what, if you're buying at these higher rates over the last year or two, at the higher prices, what's going to happen is, especially if it's an APR, as the interest rates rise, your APR is going to rise, right? And if you combine that with job insecurity and an economy that's kind of rolling over, man, that potentially is going to lead to possibly a lot of foreclosures, and that's going to drive price down as well because now you've got these houses are going to be priced lower. The banks are going to price them lower to get rid of them, right? And there's going to be more on the market. So those who are actually in the market to buy are going to have greater choice. So those who are trying to sell are going to have to lower their prices. So there you go, right? So again, if you've bought over the last 2 years and you plan on holding for 20 years, okay, fine. You're probably going to be all right. If you bought over the last 2 years and you haven't sold yet and your intent was to sell it because you thought you were going to get some fast increase on it, I think you're running out of time on that. So we'll see how that goes with there. Excuse me. Let me see here. Buying the '06 top, you'd be fine right now. Good point. Yeah. I mean, that's exactly what it is. Now, of course, I believe that if the economy continues to do what it's doing now, I think we're rolling over. We're going to have a much more likely a depression rather than a recession, as I've talked about time and time again for the reasons I've given. So, it's still a little bit different buying in now than 2006, than '06, but it really depends on how does that depression define itself. Is it some big, huge move down like it was in the Great Depression there in 1929 coming down? Or is it something that it comes down good, but it just goes sideways more than anything else, so it lasts longer? And again, if we look at theory of alternation, if that's a wave 2, the Great Depression, then wave 4, what the depression we would see here, should then be much more drawn out, prolonged sideways, more than anything else. And if that happens, then, maybe you're still okay. Like I said, buying it for 20 years. That's why I said that. Because I would expect it to be more of a sideways depression, as far as the markets go, than anything really else. But you're still going to have that big drop at first coming from everything that's just rallied up all through, over the last few years. So, yeah. Is there... Let me see here. Is there any chart tracking the housing market? Ali is asking. Hank gave you USHMI. Yeah, you can watch that. Sure. Is that Big Vape? let me see. You said, historically speaking, bottom doesn't fall out for a year or two after rates start to rise, though, right? So I've gone over this before in a little bit different way. I looked at something else. But yeah, generally, the average is about that 10 to 14 month area. Yeah. So, again, we could still have higher up in the legacy markets. But, it doesn't have to, because if you look historically, there are times when it started much sooner, right? And other times when it started much later. It just, the kind of that median is like that 10 to 14 month kind of area. And so speaking of these other markets here, let me see here what we got here real quick. NASDAQ. Oh, let me go over here. Where are we at? Okay, that's no Euro chart there. So NASDAQ composite here, this is the 30-minute here. As you can see, I've got this as a potentially coming off here as a 1, 2, 1, 2, and then we're getting 1, 2, 3, 4, 5 heading down here. If this is correct, then we've got a wave 3 target down here around 13,036 and 18 cents. A breakout above wave 2 up here will obviously invalidate that, right? If we check on over at the S&P E-minis, so the let me see here. Again, looking at this as potentially actually, this might end up being wave 4 up here. It looks like we might have an ABC, and then 1, 2, 3, 4, 5. So I think it's probably wave 4 up there. As you can see, it hit my wave 3 target down there, and then did its thing. So I would look at this wave 5 to potentially head a bit lower here. Right around 43.6750. Which brings it closer to this possible wave 3 of the larger degree there. What do I have going on here? Let's see. This would be 3 over here as far as this goes. And then you get your 4 up, which would get probably your wave 3 here will be a little bit lower once it plays out. So right now we're looking for this to kind of continue on down here toward this target of 43.6750 there on the E-minis. By the way, guys, if you don't know why it's so much greater to trade futures like the E-minis rather than stocks directly, if you're here in the U.S., you have the pattern day trader rule, which if you don't know about it and you're trading stocks, you need to know about it. Go look it up. Basically, it says that you can only trade so much in the week, so many times in the week, if your account is under a specific size, okay? So make sure you look at that because that applies to you. But if you're trading futures, doesn't apply. Pattern day trader rule here in the U.S. does not apply. You can trade as much in terms of futures as you want. So you can trade these indexes all day long, every day. Plus you have leverage and all that kind of stuff you can do on there a lot easier than individual stocks. Another reason why the options became such a big thing here, over the last year was because of that pattern day trader rule. One, and then two, because of course of leverage and whatnot. But because of the pattern day trader rule, of course, you couldn't trade all these stocks in and out multiple times a week. So you do options, and you can trade options left and right all you want. So just be sure that you guys are aware of that. Like I said, go ahead and look that up and get it checked out. Right now, I've kind of got this as a wave 3 here. It hit my target. Now, is wave 4 complete here or not? We'll see. If it continues down through here, we'll look at wave 5 getting right here at around the S4 pivot on the 1 hour, which is right around 34,165.80 right there. Jumping on over to oil here, guys. Let's see here. Oil. So I've got this potentially as wave 3 of 5. So, we had the breakout above what I thought was wave 5, potentially wave 5 over here. So that becomes wave 3 and 4. And now we got 5 of 5 of 5 coming up. But I think we're still doing wave 4 right now. So I think we've got an A and a B. And I think we'll get a C down here. Potentially around this 81, 81.30 kind of area. I think it's probably where we'll get. So we're just looking for a breakdown below this this 83.71 kind of area to signal that wave C is probably in progress at lower. This is, like I said, we were talking about earlier about the loonie, the USD CAD. So the dollar against the loonie. With oil falling back here in price, that'll weaken the loonie. And then on top of that, if we have the DXY rising, that's going to strengthen that dollar in the pair. And so then the pair should really outperform if we get something like that. Because again, you'll have a positive force for the dollar and a negative force for the loonie, the Canadian dollar there, at work on the same pair. So we're going to see if we can't get that. That gives us a wave 5 up here of around $90. Will it break 100? I don't know. We'll see how this plays out here. Like I said, right now I've got it potentially as a 1, 2, 3, 4. There's another possibility. Maybe we have 5 here, and this is A, and this is B. So this would be an A, B, and a C playing out here. Wave 3 is still going to be in the same place, though, as a flat correction, and in which case then C would drop down below this swing low here at 62.43. So I'm still watching that as well, but in either case, this 3 is still where we're looking at in both cases there, so we'll continue to watch this rally once it completes wave 4 here. If we're breaking out above wave 3, that means wave 4 is probably done. See this right here, we get 5 down for A, and then A, B, 1, 2, 3, 4, 5 as an ending diagonal there. You can see right here on the 1 hour we're well overbought. So we'll look for that move down. But that move down will probably come next week when it opens, so the pivots are going to be different. These 1 hour pivots are going to be different. And like I said, probably bring it down here lower, at least to probably that 80, 81 kind of dollar area as it does that. If we look at this, if we just go, okay, well, here's A, here's B, then C should generally be looking here at 81.29. So like I said, 81.20 or 81 to 81.30 kind of area. That would be our initial target if wave B is complete, because at that point wave C would equal wave A. But again, could continue on down here toward that 78.5 kind of level. So we'll continue to watch it as it plays out there, but I think wave B may be done there with that. Let me see here. Let me kind of catch up with you guys here. In your opinion, when do you think crypto bottoms or tops? Let's see a few scenarios. Oh, okay. So yeah, go ahead and just go back to the beginning of the show, of the episode there. Back in that beginning is where I talked about Bitcoin. I gave you my thoughts on that. Big picture, I don't think the top is in. I think worst case scenario, again, is what, has been suggested here, over the weeks, which is that maybe we're still in this wave 4 sideways kind of thing. And so, not a big deal there. If your sights are set on, the overall target. But yeah, that's what I kind of look with there. I don't think anything's said yet that it definitely needs to be the top or whatnot. Which then again leaves kind of like the open possibility of what's going on with legacy markets. I think overall that February leading into March is going to be really important for all the markets as far as giving us an idea of where social mood is based on what happens with the Fed. Yeah. So I think that's something to watch out for at that point. Let me see here. Let me see. Let me see here. Okay, yeah, so that's kind of where we're at with that. Let me see here real quick. I know I'm over my my 1 hour thing here, but I want to pull up some other things here real quick. Silver. Look at that. Remember we had that quick move up there last week, or right here, the earlier here at the beginning of the week. And then so I told Discord here on the update, today's morning update, that I'm interested in either a breakout above the top or or a breakdown below the support here. So we're breaking down below that support, which, again, kind of suggests that we've got the 1, 2, 3, 4, 5 done. Wave 2 may be complete. That breakdown below wave circle 4 support here at 24.125. That'll hint that the wave 2 may be complete. But what we're really looking for, if the count is correct here, is we're really looking for a breakdown below wave parentheses B here at that pivot. So basically at 38.2 level, right around 22.845. A breakdown through that's is your first real clue that wave 2 is complete. Continuing to break down through wave circle X support over here, 21.945, is what gives you confidence in that count and says, okay, yeah, most likely that's what's going on. We're in wave 3 headed lower. And like I said, if this count is correct, then we're looking at silver dropping below 10, which is, again, what I've been talking about for quite a while now. Yeah, for a while. A couple years now, as we were talking about this. Because remember, guys, the big thing about silver is this right here. It's all this sideways. So, looking at the daily here, we're almost topped out on the Stochh RSI. RSI getting rejected right before overbought there. So, again, if we're coming back here and losing this wave X support here, we're heading lower here, right? Again, the bigger count says, okay, this is that big count here. And so coming off the top, we've got 1, 2, 3, 4, 5. And then we've got A, B, C. And then we'll come on down here for 5 more as it comes down, which isn't really labeled on here because we see what's going on there. Big time frame here. Let's kind of zoom out here a bit so you can see that bigger picture there. So again, A down, B up. We'll get C down, which should break down below wave A, right? Should head on down there. Now, along with that, we have gold, right? And I don't know if you guys are more interested in gold. It seems like the memers got all interested in silver until it didn't do what they wanted and kind of left them in the cold. And then they were like, oh, yeah, no, not going to deal with that anymore. So locally, gold may be downward for wave 5. I was looking for potentially to push up here toward that R2 pivot on the 1 hour. We got here a little bit below, and now we've dropped down. But this decline, it kind of depends on how you count it, I guess. You can look at 1, 2, 3, 4, 5 gives us an A, a B, and then a C, right? Or maybe you've got a 1, 2, 3, 4, 5 here as a leading diagonal. Now, so what's the difference in that? Well, after this low, we've had a 3-wave rally, right? And so the rally did break out above this swing high right here at 81.4310. So if the count is A, B, C, then we've got one wave up that's already, we've got the breakout above it, right? But only in 3 waves, so it leaves it questionable. So we look at the pullback. Well, the pullback remains above the swing low here. So, looking at this, it's 3 waves up, so it could be an ABC, right? So if we can get a breakdown below this swing low right here at 1831, that says this is an ABC. And so if this is an ABC, then we look back at maybe this is the 1, 2, 3, 4, 5. And so that gives us a 1, 2. And so if that's a 1, if this right here is a 1, 2, we should expect price to accelerate to the downside on a breakdown below this wave 1 kind of support area here. Oh my gosh, man, allergies really hit me all of a sudden. Sorry, guys. And as you can see, that gives us, a 1, 2, 3 here at 1812, which right now is the 1 hour pivot. And then this wave 4 swing low here actually is almost exactly that wave 5 target at 1804. So that's what I want to see right now. I want to see, do we break down below this swing low and then this swing low, or do we rally from here and break out above this swing high? If we break out above this swing high, that'll just say that this is potentially 3 here and ABC down for 4, which gives us a wave 5 up here at about 1861.70, but still wave 5, still end of wave 4. Again, bigger picture on all this, let me kind of zoom out to the weekly here. Oh, put that back on there. The idea that maybe we've got this as a 1, 2, 3, triangle is 4, and then 5. And so that would just be wave A down. Then we get wave B up, which would probably hit right around this this high volume node at 1790, 1800, right around there. Maybe even a bit higher here into the triangle. And then you'd have 5 more coming down for C. Now that's if this is a top here, like a wave 1. And then so that would be A, B, C is 2. Now here's the thing. If instead, oh, I don't have it on this chart, my bad. But as you guys have seen my chart before, if instead this is an A and this is a B as a flat, then C should come down below, swing low here, which takes it below $1,000. Now there's always the possibility, even as a flat, it could be a running flat, in which case A, B, and C would pull back and then rally off. And in that case, we'd look for it to target this kind of $1,200, $1,300 area here to finish off C. So that could still happen. So I'm giving you this so that way you guys don't think, oh my God, it's got to definitely go down below here. I think that's where we're headed, but we'll see what happens overall. But nonetheless, it's kind of where we sit with all that as far as gold goes on there. So, you know, there's a lot going on right now. People are getting way too excitable, you know, short term, right? Here's ARK, what we continue to watch here. It's broken down below the descending channel support. So in terms of Elliott Wave, this most often says that this is probably going to be a wave 3. So 1, 2, 3 coming down here. You can see right here on the daily that we've got this potential bullish divergence building. And so, you know, of course, we're bottomed out here and oversold on Stochc RSI. You can see that volume has ramped up as it's come down. We talked about the fact that this was distribution likely here. The fall through the ice right here. The rally back up to get rejected. The markdown then continues from there. Tesla we talked about as well. We've been talking about nothing changing anything here. 1, 2 I've got it as. And if that is a 1, 2, then 3 should get us way down here around 753 or so. As it does kind of continue lower there. You can see the big bit of volume coming in today. Or on this 4 hour. I'm sorry, this is the 4 hour. Significant volume coming in on the 4 hour now as we reach here. So there's attempted buying going on from those who went long here and those who missed their opportunity to go long here who are trying to buy. But supply continues to come in on them. So you're getting expanded volume and larger candle spreads, which means, again, supply is exerting more effort and getting more result in response to that, which was opposite of what we were looking on Bitcoin, where supply was expending more effort but getting less result. It's smaller candle spreads. So again, potentially seeing that continuing lower there. Yeah, just kind of looking at this as an ABC right now. So yeah, kind of where we're at there. Do I have an Elliott Wave count on ARK? Not at the moment. I'll see about putting one in there for next week. Andrew Bennett, have a great weekend, man. Big Vape, you're on the same page as me. You think silver down to 6, gold to 900. Do I think that they're going to really hold historic values in the future? I think people give too much deference to the idea that gold and silver hold value. I tend to look at them and all other precious metals just as trading opportunities. People trade them. I don't think that they necessarily hold up in terms of value. Which, again, because I believe that, then I don't, accept the Bitcoin narrative of the same kind, I believe people can buy those things for those purposes. That's why they're buying them. But we often do things because we think they're one way when it's really another. And so I don't think it really does work that way. Just, my experience over the last, quarter of a century now doesn't kind of gel with that. What I've seen in terms of gold and and the value of dollar and everything like that. But, as long as people continue to think that, they're going to continue to buy and sell, as expected. And so that gives us great opportunities to buy and sell appropriately in response to that. Sure. But yeah. Do I think SPY is going to break 440 today? What do I expect SPY through the weekend? Nothing's going to happen the weekend. It's going to be closed. It's going to close the end of today. Let me see here. SPY, load chart. See if I got a SPY chart, some old one in here somewhere. Oh, wow, all the way back from August last year. Let's see what we were looking at back then. Oh, man, I'm going to do all this. Okay, let me just change all this. And let's just kind of throw this on there. Whoops. I'm going to have a whole bunch of stuff on here I need to kind of get rid of at this point. Let's see. Let's get rid of that. Let's get rid of a lot of its other stuff. So this is what happens when you teach, guys. You have a whole bunch of just different stuff on here when you're showing other people how to use all these different things, right? Oops. There we go. If you're into the SPY, it's bouncing on the pivot, and you hope that holds. Let me see here locally. Let's jump into the daily here. My first thought looking at this is 1, 2, 1, 2, 3. You can see that OBV is dropping off significantly. As a matter of fact, OBV started dropping off back over here. So you've got this divergence in OBV, and which is your on-balance volume, and your price, which should have alerted you there's probably a top here. And as you can see, it just kind of a little bit higher. So, if I'm looking at this right now, to me, that looks like 1, 2, 1, 2, 3 of 3 coming in. Let me see. This is just off the daily, so a real quick pull here. No in-depth look at it or anything. Yeah, see, that could be a 1, 2, 3, little overextended 3. We get a bounce for 4. We get 5 coming down. And then that would just be a 1, 2, 3, 4, 5 still coming down, targeting this kind of swing low area here, 428. So right now we're at 442. Does it break today? Oh, I don't know. There's just a couple hours left. Anything can happen. End of the day, a Friday. I think it's got a good chance to, but I don't know that I would give it with any kind of significance that it is. Oh, wow. Wait a minute. Let me see here. So, yeah, 1, 2, 3, 4, 5. Come up here. We might have it as a 1, 2, 3, 4, 5, and then A, B, C. So 1, 2. Okay, it's down there. Either way, that's an even worse count for it. Where did I say? Kind of like that area. Yeah, that would get us down here around 430 just to complete wave 3 of that. So, yeah, just looking at either way there, it looks like we may get a little bit of a bounce. Again, it's Friday. Volume tends to drop off on Fridays, especially at the last half of the day. People kind of close up shop early, get ready to go home. Traders are notoriously non-interested in trading the last half of the day on Fridays, whether it's Forex or stocks or whatever else. So is it gonna drop down below 440 today? I don't know. I think it's anybody's guess. But what I can tell you right here, these last two 4-hour candles here, you've got smaller candle spread, larger candle spread, and you've got larger volume. So what happened is you made a larger candle spread on lesser volume. So your effort and result is here, but then the next candle over, a lot more effort and much less result. So, demand showing up here. I don't know if it's going to break 440 again, for today. I don't know. There's no anything in it that says, yeah, it should or whatever. Yeah. Yeah, it's not. It's just not looking good. Yeah, it's in line with all the rest of them. You know, they all the indexes look pretty cruddy. They just continue to get beat down. But what does that mean? So, real quick, guys, before I get out of here, with this extensive continual push down, where it just kind of day after day continues to push down, be watching for that reversal, because the reversal is going to be a nice swift move up, or it should be, because you have so much continued pressure down and down and down and down. And as you get toward the bottom, looking like at those 4-hour candles or so, maybe even daily here, and you start noticing that you're getting that change in effort and result that I was just talking about, something like that, that should tip you off that a bottom may be nearby. And so you're going to really want to watch and see if you can get some nice rally back up. If we look at yesterday's candle and today's candle just a bit more volume, just a little bit more volume, but much, much larger candle spread there. So far, a much smaller candle spread today, and almost, again, the same effort there, which suggests that there's more effort being applied to push it down, but they're getting less result, which means demand is showing up more and more and more. So, and that means either a reversal or a potential local bottom coming in around that area maybe. So it could still push down a little bit more, say, on Monday, and then, maybe even just leave a wick and then rally back up kind of idea. Something like that, yeah. Weekend's going to be interesting for Bitcoin. Unlike the legacy markets, Bitcoin's open on the weekends. We don't have anything special going on here in the U.S. that would keep traders out of the market on the weekends. But the market is pretty fearful. So we'll see what happens with that. Like I said, looking at that Bitcoin chart, there is that same idea of greater effort, less result, which could signal that at least a local bottom may be in there. And at that point, we're going to look for that impulsive breakout above this daily S1 pivot. And that's going to hint that maybe Wave 2 is complete, but we really need to then look for the breakout above 44,453 to get the first real clue that it may be. And finally, this higher wave X up here at 52,100 should add a lot of confidence to the idea that maybe Wave 2 is complete there. By the way, guys, the other thing we haven't talked about is if you believe that I've talked about it before, just not recently. Right here. If you believe that this is a flat going on here, so ABC down and ABC up, it is possible that if it's a flat, as always, if it's a flat, it's possible it could also be a triangle, right? And the triangle is what would keep this really kind of stretching out for a while, because you'd have A, B, C, you get D, E, and then break up. So, with March coming in, and I told you guys March is kind of like that big time we're looking at, right? Does this continue to maybe print a triangle, A, B, C, D, E, into that next month and a half or so, almost 2 months? That's definitely a possibility there as well. If it is, then, of course, we should expect a nice thrust out of that when that's complete. So, that may be what's going on there as well. So, March is the Fed. Remember, the idea is that that the Fed, maybe you weren't here. So the idea is that the Fed is supposed to be wrapping up taper, finishing taper. Remember, they doubled the speed. So if they keep that up, it's supposed to be finished in March. And then the likelihood of the first interest rate hike coming in March. Yeah, that's what it is. And that has to do with what I was talking about earlier with the 10-year Treasury notes. And we've got all that open interest in puts that are for that March contracts. Yeah, so that could really, like I said, if that thing could really explode, and if it does, you're going to feel that everywhere, guys, including, Bitcoin and everything else. So yeah. I predicted, God, almost a year ago from now, when the Fed was saying they weren't gonna even look at tapering until sometime this year, maybe no interest rates hikes until 2024 last year. I was up here telling everybody that, they're going to have at least 3 interest rate hikes in 2022, and we're going to start taper before the end of the year. And so far, I'm right. It was the same. I did this back in, 19, guys? 2019 or so, where the Fed said they were going to raise hikes like 5 times within the next year. It was that summer. And I said, no, their last rate hike is in. Or they said they were going to rake it. They said they're going to drop it down, and they did. And it's just the same idea here. So yeah, about a year ago, I've been saying that they were going to have 3 rate hikes this year. Now, could it go to 4? Sure, maybe. Like I said, Goldman Sachs, and I cannot think of the other stupid bank at the moment here, is now projecting maybe 4 rate hikes this year, and I could see that. But for the last year or so, I've been projecting 3. The taper would start last year, and we get 3 rate hikes. 3 rate hikes this year. So even if we got 4, I think it's pretty good for a year ago, right? When everybody was still screaming that we weren't going to get taper until possibly 2022, and then no interest rate hikes till 2023 or 2024. So yeah. Let's call it no interest. You're talking about open interest in both ways? Yeah, but open interest, it's not just both ways. It depends on what's going on with your trend at that time. If you're getting open interest in a rising trend, that's support for the trend to continue to rise. If you're getting open interest with a declining trend, increasing open interest, that means that trend is being validated. So yeah, if you have a trend that's going up and your open interest is dropping off, that's a good sign that you may be seeing a reversal coming in. So it's not just simply all open interest goes both ways. What's your trend? That's what you're looking at. And for right now, anyway, the trend continues to be up for the yields especially on that 10-year bond there. So, we'll see what happens with all that. No, I don't think it was was it JP Morgan? For some reason, I'm thinking it was an international bank. I'll have to figure out who it is, guys. Maybe you'll get interested now and look it up. Yeah, I'm still here, Blaze, but I'm actually about to get going, man. I'm way over here, so let me see here. Who's this here? Oh my gosh, I'm so sorry. I can't even pronounce your name. The end of it says Yokusha says they might do a 50-point basis rate increase in March and completely end the taper in January. Yeah, so there's a lot going on with all that. Exactly. March is that time, though. March is definitely that period that everybody, if you're in any kind of market, interest rates, credit swaps, derivatives, futures, options, legacy market, crypto, FX, whatever you're in, what's going on in March there is definitely should be the top of your what you're paying attention to, because that's going to give you an idea. Well, I said social mood earlier. Really, it's really going to give you is an idea of the Fed's response to social mood, is what it is. Social mood's already telling you what's going on. The Fed always plays catch up, and so they're always reactionary, not pro. They don't get in first. They always come back afterwards. So yeah. But anyway, so there you go, guys. Hey, Crypto Girl, good to see you, but I need to get going. What if I sold my house now to buy a bigger house come the real estate correction? If I wasn't leasing at the moment, that's what I would have done. I would have already sold, probably within the last 6 months, expecting this top to come in. If I wanted to buy a bigger house, depending on what my position is as far as how much I owed and what my my income is looking like, and what's the, again, these things I talked about earlier. What is the likelihood that if the economy does roll over, that you get to keep your job, that you don't lose your job, that the economy rolling over doesn't put hardships on you that make it difficult to keep up with your service your debt, your mortgage and whatnot. Yeah, keep all that in check there for sure. All right, guys. Hey, listen. Yeah, so I'm gonna get out of here. I hope you guys have enjoyed the show. I really appreciate the questions and the thoughts put into there. Again, guys, I'm not here to guarantee you the price is going to do anything, and I really would advise you to be careful if that's what you're trying to get from anybody out there, or if they're trying to sell you on they know what's definitely going to happen. They might get right, they might get wrong. The goal for you, though, is to not blindly follow anybody, myself included. I do my best here to really explain why I think the things I do. I don't just give you, say that, oh, it's just going to do this. I rarely am in the same mindset as the crowd, which has served me quite well. It's not that I'm necessarily a contrarian trader or investor. It's just that I don't pay attention to the crowd as much as I pay attention to what's going on. And so, sometimes, many times, it just happens to be the opposite of what the crowd's doing there. But we'll see how things turn out here. The goal is just to be aware, guys, and to think and to not take trades or investments without, understanding where the actual validation levels are. Remember, it's a difference between gambling and speculating, right? Gambling is anticipating the market. It's just jumping in because you think something's going to happen, right? And that's why people lose their money. Most of the people lose their money in the market because that's how they trade. Speculation involves confirmations. You're looking for confirmations to give you reason to enter a market and not jumping in before those confirmations. Even though you get the confirmations, it doesn't guarantee that price is going to continue going in the direction you think it is, but it's a lot more likely to than just jumping in without those confirmations to begin with. So again, big difference between anticipation and speculation. And most of the market, most of the people you guys see online, in social media and everything, are anticipating. They're anticipating. Doesn't make a whole lot of sense. If you're a trader, man, I'll tell you what, if you can do confirmations every day, you're a speculator then. And you'll be a lot better off. All right? So anyway, guys, as always, remember, the only thing you control in the market is how much you lose. That's it. Risk management is absolutely the most important thing you guys are going to do day in and day out as traders. So make sure that you're putting most of your effort toward bettering that. It'll give you the greatest return on your effort that you're doing it, okay? All right, guys. Hey, listen, y'all have a great weekend. I'd love for y'all to join us at howtotradetowin.com. If so, I'll see you over in Discord. If not, I'll see you guys hopefully next Tuesday at 11 a.m. Central Standard Time. And at that point, I'll probably go ahead and make that announcement, which I think is pretty big news. And our members in Discord seem to be pretty excited about it. So hopefully y'all will be as too. Until then, trade safe and be safe out there. Try not to catch COVID. That's just such a pain in the rear end right now. And just have a great weekend, all right? Take care. Hank, enjoy Thailand, man.